Next week we have a short trading week with the Labor Day holiday on Monday. Get the jobs report next Friday. Then we'll get the inflation data the following week after the holiday week here. And after that, we'll have the Fed meeting there, the FOMC meeting of September 18th. So we're moving now into September. Likely going to see the S&P move to a new high where it's going to form a top ahead of the Fed meeting, with the Fed meeting, or shortly after the Fed meeting. Historically, that has been the case. Now, Hurd believes that the rate cuts are very, very bullish, going to usher in this big move upward, long-term bull market going into 2027. The problem is that the rate cuts have already been priced in. The Fed is going to begin to lower rates because of a coming recession that is being predicted by a lot of accurate indicators. The stock market will begin to price in the recession. Get the jobs report next week. 3-month moving average is above the low made over the last 12 months by 0.5%. We're currently 0.53 with our last report last month. During the Psalm rule, which states that when you have a month moving average 0.5% above the low over the last 12 months, predicting a coming recession. It is now predicting a coming recession with our last report. Been right over and over and over through the decades. Not going to be wrong this time. The stock market will price in a recession. The Fed will try to cut to ease the pain of a recession. It's going to happen. So we're going to get that next week, that jobs report. But it is predicting, the unemployment rate is now predicting we're about to have a recession. Recently we got that retail sales. Oh, great retail sales number, the best number in 2 years. This proves we're not going to have a recession. No, it doesn't. Going to have a recession. It's just a reason to have a rally. The institutions are selling into the rallies. As I said, we have the 3-month Treasury yield dropping below the 50-period moving average. This is warning that we're about to get a Fed pivot. The purple line right here is the Fed funds rate. It's flatlined. That's happened before. And again, we've seen the 3-month Treasury yield drop below the 50-period over here. Over here, this is the 2000 top. This is 2007. Again, 3-month yield drops below the 50. The Fed does a pivot, and the market declines. Now, the Fed pivot doesn't make the market decline, but it is associated with it because the Fed is beginning to pivot because of a coming recession, beginning to lower rates. Hurd is going, oh, they're going to cut rates. This is going to be so bullish. The rate cuts have already been priced into the market. The pause that we have right now, where we go flatlined, we go up to the restricted level and we go flatlined, that creates a topping process, which is what we're in right now, and that's followed by the bear market, which we're about to get, and the recession. Again, another indicator warning, hey, recession is right around the corner. The 3-month Treasury yield dropping below the 50-period moving average has been associated with the recessions and the Fed pivot, the rate cutting campaign by the Fed. So again, recession is coming. The market will price that in. This is the yield curve. Currently, it's inverted below zero. That shows that, again, the 2-year is higher than the 10-year. It's an inverted yield curve. It's predicting a recession is coming. We have the longest inversion of the yield curve since the 1929 crash and the Great Depression. Again, it's begun to steepen. Okay, it's getting ready to uninvert. Maybe that happens immediately, maybe it doesn't. And again, maybe we pop higher, and again, oftentimes you pop higher and then you go down, and then again, the recession follows shortly thereafter. Sometimes it'll go positive, then go right back to negative, and then go positive, and again, it plays out. Sometimes it goes positive and stays there. Warning, a recession is about to start. These people talking about the soft landing, this is Kool-Aid for the herd. institutions promote propaganda. If wasn't the case, why are they selling into the rallies? NASDAQ just dropped nearly 16%. Why? And by the way, previously I told you we had the triangle forming here, and that was right at this these trend lines that intersect right here, where again I told you that a top was forming as we were rallying into them, and then as we hit that level, July 10th, you to be watching for the CPI sell-off. We got it. July 11th, I told you the top is in. I still believe the top is in. Again, NASDAQ, I do not believe it's going to make a new high. I believe the bear market has already started with NASDAQ. S&P is going to make a new high. Dow's making a new high. NASDAQ is not going to, in my opinion. The steepening of the yield curve is predicting is predicting that we're about to the uninversion of the yield curve, and again that means recession is right around the corner. It's going to be associated with the Fed pivot against September 18th and the topping process completing for the stock market. So you have to understand topping process, the Fed pivot, these things are going to happen because of a coming recession. Soft landing business is fairy tales. We're going to have a recession. The inverted yield curve is predicting we're going to have a recession. The Psalm rule being triggered with the unemployment rate is predicting we're going to have a recession. These are reliable recessionary indicators. The steepening of the yield curve historically, it rises and the market falls. NASDAQ is likely going to go up and fill the gap at 20,400 first. S&P will likely make a new high. We're forming a topping process. The dollar had this trend line, it broke it, and I've been talking about this other trend line right here. It broke out and it's back testing it. Now we have this 1% move off the 200-week moving average. We have the horizontal support levels here. Again, trend lines change. We broke this one and ended up finding a bottom here. In history, trend lines change all the time. The downward trend lines here changed. But again, if we can get back above the broken trend line, back above the 20-week moving average, 50-week moving average, the blue line, the green line, again, the dollar could begin to surge. You know, during the financial crisis, market sharply dropped, dollar surged. Going to be the case here. The dollar weekly chart getting a bounce with the back test and moving off of extremes for the week. Again, this is suggesting that we're going to have problems the market in the future with now we have a breakout and back test of the declining trend line. Stochastic in the weekly time frame has become very oversold again. So we'll see if the MACD can firm up and get back into positive territory. But we're going sideways in this range, so we're going after going negative, went positive, negative, positive, negative, and we've just been kind of in this trading range going sideways. So again, we'll see if we can get now a trending move on the dollar going forward. That's likely going to be the case as we complete a topping process and begin to start a bear market on the S&P and the NASDAQ. Now again, I've talked to you at great length and detail about the Fed pivot, and again, 2000, we had the market top before the first rate cut on January 3rd, 2001. With it, we got a 3.5-week bounce. After that, the market collapsed even further after the 19.5% decline. Ended up dropping 51%. Again, the Fed cuts were associated with the coming recession. The market priced in the coming recession. The Fed cut because of the coming recession. Thing in 2000, again, the first rate cut going a little higher. And again, this is why I'm saying we could see the market peak ahead of the rate cut. We could see the market peak just after the rate cut or with the cut here. We had the rate cut, our first rate cut, September 18th, 2007. We peaked 3.5. We went a little bit higher, got a double top over here. Here we got a lower high. Here we got a higher high, and again the rate cut was associated after the drop already started. Here we got the double top, and through 3.5 weeks later we peaked, and then we got a 20.5% sell-off, rebound, and a collapse of nearly 58%. Again, a 3.5 week bounce. It's not necessarily going to play out the same way, but again, the Fed pivot is likely going to be associated with the market top. As the market begins to price in recession, the Fed begins to cut because of the coming recession. The Fed pivot, the Fed rate cuts don't cause the crash. It's the economic recession. But the rate cuts are happening because the recession is coming. So again, we're likely going to see a new high on S&P, a lower high on NASDAQ, and a topping process that's going to be followed by a major sell-off ushering in a bear market. Right after we had the pivot, the market peaked in a topping process and it dropped 20% in a few months. So it's coming. There's a couple things here. We were watching the divergences on the 60-minute charts. It's a mild pullback here. We had the divergence as well, but again, prices corrected sideways, a mild pullback. It's likely going to be that if we have a legitimate breakout of the triangle on the 60-minute chart, that again, we try to form a divergence immediately. We see that legitimate breakout on the 60-minute chart, and again, a divergence right here. We've had momentum turn back to bullish, momentum lines turn back to bullish. Previous negative divergence was not able to change the trending signal. The cloud is still bullish. Again, I'll be watching to see if we can get a legitimate breakout. We go make a new all-time high, complete the larger topping process. And again, I do believe the S&P is going to make a new high. Whether it does it sooner or later, we'll see. We do have a breakout. If we can get confirmation to that, we can go to a new high immediately. But I'll be watching to see if we get a larger divergence here with momentum in the 4-hour time frame on the S&P. Same thing here with the NASDAQ 4-hour chart. Again, we've pulled back. We're breaking out, attempting to break out of a bull flag pattern. Signals are still bearish here, but momentum right here at the center line, if it can firm up, again, you can make an attempt to try to fill that gap at 20,400 sooner rather than later, which I do believe is going to happen. But there's still more work to be done here if we're going to try to rally up further right here, right now, with the NASDAQ 100. This is the 4-hour chart of the NASDAQ. And the cloud turned bearish here, and it remained bearish. Tried to get momentum turning back to bullish here. Got a bullish signal here, but it never got confirmed. We couldn't flip the signals back to bullish. Here in the 4-hour time frame, we got it, and it did play out. We did flip the cloud back to bullish. We did get back above the line here representing the short-term swing move. We dropped below it over here. Then we got back above it. We're right at it. So again, we're going to be watching to see if we can resume the advance right here and now on the NASDAQ if we have a legitimate breakout. Our chart here of the NASDAQ. S&P still has green. Even though we've had the S&P go sideways, it hasn't done technical damage. We formed that triangle, and now we're attempting to break out of it. So again, momentum line's still bullish. It's not red yet. If the breakout fails, we can get the bigger pullback and then go higher, going into a Fed pivot. If we can get it right now, we may witness a topping process sooner rather than later on the S&P 500. Here we have the daily chart. And if we turn back up, again, could see momentum form. The reference point of a divergence, got a little one right there, could form a larger one if we get that immediate breakout of the triangle taking us to a new all-time high sooner rather than later. Now here's a daily chart of the NASDAQ, and again, it's pulled back, trying to break out of a bull flag pattern. Momentum is still negative here at the moment on the daily chart. The momentum line bearish. Bars are still red. We've got a green cloud right here. We've got the been still green, the background is still green. So again, we're going to be watching, can we rebound back up to fill that gap here on the NASDAQ daily chart. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the indicators, you like the charts, let me know that by supporting the channel. I don't have any sponsors, just a direct relationship with you. The money made on YouTube is through sponsors. I don't want to do that. I don't want to sell you a bunch of junk you don't need. But if you follow the link below, it'll take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. Please consider helping out today. I really do need your help in order to make it work. Let me know you want this information, you like this information by supporting the channel today. I thank you for that. Also, I want to again remind you the market will be closed for Monday on Monday the 2nd, September 2nd. That is Labor Day in the United States. The stock market will be closed. S&P's had this negative divergence form, and all it has done is given us a mild pullback to form the symmetrical triangle that's now attempting to break out. We'll be watching to see, does it get a confirmation and follow through as momentum's trying to turn back up here. We'll be watching to see what happens with that. But again, can the S&P go higher right now? I have this L8 wave count. Again, it's speculation. It could change. But again, a possible 1, 2, 3, and then 4, and then now we're setting up 5 that will go above this high, and that's this dotted red line right here. If we do that, again, we could complete a topping process. So just something to pay attention to as we move towards the Fed pivot. The breakout of the triangle fails, and we end up coming back. Again, we get a bigger sell-off before we move to a new high. We'd have to see the breakout fail of the triangle that I just showed you. Now on the S&P, again, we had this peak over here with the diversions. It gave us almost a 10% sell-off, and here over 3 days, an 8% drop from the lower high and the counter trend that happened. Again, now we're seeing this rally back up. We formed a divergence, but all it's done is given us a mild pullback and consolidation. We have, again, the possible breakout of the triangle there late Friday as we go into the holiday week here, the short trading week. Again, I talked about gaps. There's a bunch of gaps right here, but right here, all we've come back is to fill this gap right here and hit this horizontal support low right there. So again, we're getting the potential breakout of a bullish symmetrical triangle. We need confirmation of fall through, but if we can clear this level and get to a new high, again, we're likely going to soon see a topping process complete, and a reversal will take place. P60-minute chart here. Just quickly, if I again mark that little symmetrical triangle in there, you can see again we are attempting a breakout. We'll see what happens with that. If that move fails, again, you could still get a bigger pullback, but ultimately, I think we're going to move to a new high, set up a reversal. I'll be watching if we do move to a new high and have a legitimate breakout here. Do we move back up to extremes? And then we'll be watching for possibly another divergence to form. This divergence has only given us a shallow pullback and nothing deep here. So again, if we do break to new highs and we do have the breakout, then again, it's likely that the next sell-off could start a reversal. Again, possible 5-leg push higher here. And again, in the daily time frame, we had this little tiny divergence form on the RSI, but it's only given us a mild pullback again to horizontal support right here, and filling that gap right there, the gap higher. And what I'll be watching here is if we do move to a new high to fill the gap up here at the 5670 area, do we start moving back up to extremes here? And then I'll be watching, does a divergence develop, or do we just reach an extreme? And we had the divergence here that gave us nearly a 10% drop. No divergence here. We did get a higher low, confirmation of a higher low. the divergence here is giving us a pullback. So again, be watching to see what happens here. And do we diverge from this peak right here and form a larger divergence, but yet the RSI makes a lower high, but price makes a higher high? Something to pay attention to if that does begin to form. S&P daily here. Again, the VIX is holding below the 50. If it holds below the 50, the green line, S&P can try to make a new high immediately. If we start seeing the VIX get back above the 50, then again, the rally, the breakout of the triangle on the 60-minute chart could fail. So just something we're paying attention to. The 50-period moving average on the VIX. Friday, the VIX was down just over 4% to close at 15. Now again, I believe that this gap is going to get filled, whether sooner or later it's going to get filled at 20,400. We did get a possible breakout of a bull flag on NASDAQ here on the 60-minute chart. We came back and filled the gap right here at this dotted red line right here and pulled back. And now again, if we can get a legitimate breakout here and a follow through, confirmation of follow through, we can start to move right now and again come up here and possibly get an ABC correction and then begin to turn down and get a lower high. Again, if we do turn down and get a bigger sell-off immediately, then we can come back up at this at a later date here as we move closer to the Fed pivot or shortly thereafter, and then hit this level and turn. So again, whichever way it plays out, whether we get a sell-off here and this breakout fails, can't get back above the cloud, we're stalling at the 50 period here, and then now we're trying to get back above it, but we stalled at the 50 period there. We've got the cloud directly overhead. If we clear these levels and attempt to recover, you can try to do it right here, right now. If we see the rally fizzle out and fail, or go higher and end up failing, again, then we'll be looking for a scenario where we get a bigger pullback and then a turn higher. But regardless of whichever way it plays out, again, I think that gap will be filled. I think we will get a lower high on the NASDAQ, and then I think you'll complete the topping process and it will diverge with the S&P 500. NASDAQ 60-minute chart, again, this divergence gave us this sell-off. We'll be watching to see what happens with the RSI. Does it move back up to extremes right here and now, or does it have to have the rally fail and go lower before we get that bigger rally to build momentum? We'll be watching, but again, looking for an ABC move, and again, this is possibly completed now if we get this legitimate breakout. We'll be watching as we go into next week. S&P can move to a new high. We can start moving back to fill this gap, and again, complete the topping process surrounding the Fed pivot. Look at the NASDAQ up close here. Again, you can see we're attempting to break out of the bull flag. You can start clearing that cloud, go higher. And as we're doing that, momentum is trying to turn back up here to confirm a higher low. Again, I've talked about if we get a bigger sell-off, you got the gap down here at 19,000, another one down here at the 18,550 area. Again, actually these gaps are going to get filled, but if we can get a legitimate breakout here, again, we can resume the advance and move towards 20,400, and again, likely complete a topping process. So on NASDAQ, with this divergence, drop down sharply, attempt a rebound, and then it dropped in 3 days. It dropped nearly 11%, but in totality 15.75% from that high, now recovering back up, and again likely going to attempt to fill that gap at the 20,400 area. But if momentum turns up again, you could see a bigger rally and a move towards the 20,400 area. 60-minute chart of NASDAQ here, momentum turning back up. Now here is the NASDAQ 100 daily chart again, back up here on July 10th, that I thought that the NASDAQ peaked. I still think that. To be watching for a CPI sell-off. We got it the very next day. We dropped 500 points. Told you at that point with the 10 period to be watching for a rebound back up to the 78.6 Fibonacci. We hit it right on the nose right there, and we began to turn, and we saw this sell-off. Now we've seen this recovery, this rebound, after NASDAQ dropped nearly 16%, 15.75%, and then now we're getting this recovery, which again, I think will eventually fill the gap here at 20,400. The question is, are we going to get a bigger sell-off right now and then, come back up here and do something like this? Or are we going to get it right here, right now, and attempt to do it and then turn down like this? We move towards that Fed pivot. We'll be watching. Regardless, I think that we're going to complete a topping process and end up getting a much bigger sell-off. But I do believe we are in a topping process. And I do believe we're eventually going higher. Fill the gap at 20,000, but I think this peak will hold. I think the S&P will make a new high. We do it immediately, sell off, and then come back up. We'll see. But again, we're trying to get a breakout on NASDAQ of a bullish falling wedge here, and we're trying to get a breakout on the S&P of a bullish symmetrical triangle. They have to have confirmation and a follow through, so I'll be watching for that early on next week with our short trading week for the Labor Day holiday. The sell-off took us back up towards the 78.6 Fibonacci. After we sold off, we rebounded. I should say the rebound took us back up towards it. We had the 78.6 Fibonacci just under 20,000 right there at 19,998. Again, we turned off at that level. We pull back. If we start clearing the 78.6 Fibonacci, then this gap fill then comes into play at 20,400. So we'll see if we try to do it immediately or if we sell off further and then try to do it. We'll see which way it plays out. But again, I think it's coming. And I think it's coming surrounding the Fed pivot, which I believe will be September 18th. And the Fed has now all but signaled that with Powell's Jackson Hole speech. 60-minute chart got a breakout of a bull flag pattern. I'll be watching to see if we can clear next week the 10-period moving average, a red line right there. And then I'll be watching to see if we do we clear the high right here, this previous peak, and the 78.6 Fibonacci, again, that 20,000 level. If we can clear these levels, then again, we'll be looking at the gap fill here at 20,398. Watching the RSI. The RSI, as we're trying to break out of the bull flag, is firming up right here. Does it form a divergence, or do we just see the RSI come back up here into extremes? We move to come back and fill that gap. Do we fill the gap immediately, or do we get a bigger pullback, have the rally fail, or go a little higher and have it fail, and then come back up? I'll be watching to see which way it unfolds. But we are trying to break out of a bull flag pattern. And again, the negative divergences on the 60-minute chart, it's only taken us back to this gap support area. So again, we're trying to bounce off gap support at the moment. Be watching this candle we got here, possible bottoming tail if the move is done in the daily time frame. A hammer candlestick if we can get a legitimate breakout here. We did break out, but if it can get the follow through, the confirmation and follow through, then again, this gap fill is in play up here, and move above that 78.6 Fibonacci would be a sign of strength that we just saw a moment ago. Again, same thing here with the MACD. Be watching to see if the histogram ticks back up, preventing the MACD from getting a crossover. Do we see the stochastic turn back up and end up forming a divergence, or just moving back up to extremes as we attempt to try to fill that gap? Do we do it sooner rather than later? We'll be watching the bull flag breakout that we had on Friday to see if it gets confirmation and a follow through. And can we clear that 78.6 Fibonacci to go back and fill the gap at 20,400? In my last update, I talked about the weekly and the monthly charts in great length and detail. Just want to show you this real fast. This is the awesome oscillator in the weekly time frame. The MACD, this is NASDAQ weekly chart. MACD formed a divergence. It's now going to set up a lower high. S&P is going to form another reference point of a divergence in all likelihood. Watching that 20,000 400 level on the NASDAQ, but I'm going to be looking to see if we get green bars going closer to, maybe next week, or going on closer to the Fed pivot, September 18th. I think we'll end up validating a lower high. Now, if I'm wrong about this being a peak, you have the trend line going back up directly just above this level, the rising distance, the upper boundary of the channel that I've talked about. Now, again, I tell you exactly what I think. I think that we peaked. I think that we're going to set up a lower high. I think it will diverge with the S&P. I think the S&P will make a new high. I'm going to be watching for green bars here in the weekly time frame going forward, and maybe we see that going into next week or the following week after that. Watching to see, do we get a sell-off, then a rebound, or again just a mild sell-off as we've seen so far. We've seen a pullback on NASDAQ, but now it's trying to break out of a bull flag on the 60-minute chart. But the weekly chart here on NASDAQ 100. Looking for the same thing, but only for a divergence on the S&P 500. Again, the MACD is likely going to turn up next week. We're going to have a short trading week, probably on lighter volume with the Labor Day holiday in the United States. But again, we'll be looking to see if we get green bars going forward. We did get, again, possible reversal bars. It is possible it drags out and we go down and then go back up, as I've talked about. But again, because we have the negative divergence on the 60-minute chart. But so far, it's just given us a pullback on the 60-minute chart and a sideways kind of consolidation that formed now a bullish symmetrical triangle that's now breaking out, which you'll see in this video. So again, I'll be watching to see, do we get green bars next week? Do we do it as we move closer to the Fed meeting? I'll be looking for green bars here. I'll be looking for another reference point of a divergence. I think the S&P will move to a new high. Then I think it will top out, and again, counting the Fed pivot, either ahead of the Fed pivot, with the Fed pivot, or shortly thereafter. And again, the Fed pivot is the lowering of the rates. Right now we're with the Fed pause, where they've stopped raising rates but moved rates up to a restricted level and holding them steady. Some things I'm paying attention to here in the weekly time frame: the awesome oscillator and the MACD. S&P likely going to make a new high. And I'll be watching, do we get that immediately, or do we pull back and then get that after a bigger pullback? But we are trying to break out a triangle on the 60-minute chart.